Let's talk energy, right? We're watching $70 the barrel. Oil's been under that level. Jay Hatfield's with us, founder, CEO, portfolio manager, Infrastructure Capital Advisors, and Jeffrey Small, president of Arbor Financial. Thank you both for being with us. So Jay, as we take a look here, obviously we have the OPEC meeting. I just checked a moment ago to see if we got any updates, but obviously they're looking at the plan. And they are also looking at $70, which probably doesn't make OPEC very happy. Tell me.
Well, we did downgrade our forecast for oil for the rest of the year to 65 to 75, which is what the range we were using during the summer. And the reason for that is there's clearly going to be a deceleration in international travel. And that was going to represent about 3 million barrels a day of incremental demand. So the outlook is worse. There was even talk before Omnicron was announced of there being a pause just due to the SPR releases, almost as a political response to that. So the consensus really is, and in our view, although we don't know, we won't know until we know, is that they'll take a pause and try to balance out the market and wait for the impact of these oral drugs and, of course, potentially a new vaccine, mRNA vaccine, to come out. So a pause is the consensus, what we're expecting.
Somewhat of a pause right now. And as you said, probably, or maybe some less demand going forward. Jeffrey, what are your thoughts? You said OPEC might be held hostage by Omicron. Can you explain that and what you see happening?
Yeah, it's very similar to what Jay said. I completely agree with him. They are being held hostage. They want to increase another 400,000 barrels a day. From where they are. And it's important to note that OPEC's really about 3 million plus barrels a day behind where they were pre-COVID. And so they're a long way off. So they're anxious to get their money and start selling more oil. But Jay's right. The demand is going to start to wane. I have a little bit more optimistic perspective on Omicron. I think it's going to be relatively benign on demand. And I think that Omicron has been here a little bit longer than everybody realizes. And the lethality of what everybody's promoting in the press is not going to be as severe. So the jury is still out. We're really not going to know for another 2 or 3 months. So in the interim, that presents buying opportunities as we see the market waning.
And then, Jay, as you take a look, you said people may balk at their winter bills. Tell me a little bit about that.
Well, we do think, and this is also another bullish point, because Jeffrey and I are on the same page really about long-term bullishness, is that it's important to recognize that there's been a failed energy transition in Europe because they did not secure sufficient natural gas supplies. And that is going to be something that bolsters demand, because right now natural gas is trading about $180 a barrel equivalent. And that's affecting our natural gas prices as well. So you're going to get sticker shock. They have horrible sticker shock in the UK because they're both electric and gas prices are up 500%. But even here, because our prices are being dragged up, we think there's going to be some political backlash. There already is some political backlash, but even more when we start to get these winter bills, which will be coming in, over the next couple of weeks. So that is a big dynamic, the failed energy transition in Europe.
And we've already seen it at the pump. I mean, there's no doubt about that. It always goes up faster than it comes back down. That's for sure. Jeffrey, your thoughts about investing in the group, if you have any. I don't want to press you, but as you look at the group, are there ETFs? Are there specific names, types of energy plays? Is there any money to be made as an investor?
I really think there are. And I think you look at the perennials like Chevron and Exxon, they have a very multifaceted approach now as they go into the green side of the energy production spectrum. Chevron is really leading in the bio space, and Exxon is really leading in the carbon capture space. And we see lots of opportunities as time goes on. And if you want to be really speculative and super risky long term, you could look at a company like Fuel Cell, who has Exxon's invested, hundreds of millions of dollars with thus far to develop their new fuel cell technologies and their carbon capture technologies.
Okay. Yeah. Jay, quickly, any investment ideas, making money on energy?
I would just recommend, like Jeffrey, I guess, being more conservative when it comes to energy. So get a yield. So that's the super majors, including Royal Dutch Shell, which has natural gas, but more conservative companies and pipelines where you get 8 to 10% yields, because you're taking enough risk anyway. So you don't need to go into the small caps and not get paid dividends. So that would be my suggestion. Be more conservative because energy is plenty risky already.
Right. Jay Hatfield, Infrastructure Capital Advisors. And Jeffrey, thank you so much. Jeffrey Small, President at Arbor Financial. Nice to see you both. Thank you.
Thanks, Nicole.
Thank you.
Conversation.